Hello traders, welcome back to the channel, welcome back to the mighty channel. So I'm back again with another banger, another video, and today we are going to be talking about a trade that happened on NZDHF, a trade that played out very well like we had anticipated on NZDHF. So I'm going to be showing you how to use supply and demand with various confluences in order to execute or enter a trade. Remember, all you have to do is you have to learn the strategy first. After learning the strategy, then have confidence in you, in the strategy, because if you do not have confidence, you will find yourself entering the trade, and then before it starts moving to a direction, you yourself stop the trade yourself. Like, you stop the trade yourself, you just get out of the trade instead of letting the trade show you where it wants to go. So what happens is, if you trust your trade, you're going to enter your trade, set your stop loss, set your take profit, and then wait for that particular trade to move. If you don't trust your trade, your setup or your strategy, that's where you'll see people start gambling and wondering, where should I do, what should I do now? It is now retracing, it is going to hit my stop loss. Whether it retraces or not, you're very sure 100%, as long as it has not hit your stop loss, you are going to stay in that trade until it hits your take profit. Obviously, you'll have to employ some trade management skills, but that is not the point. The point should be we either hit take TP or hit stop loss. Okay, so now we have NZ, but before I proceed, guys, we're supposed to hit 500 subscribers. We have stalled on 499. I don't know where that one subscriber is, but wherever they are, they should come and subscribe and let our channel move. Let our channel move. Okay, so now I think I'll proceed. I'll just give you 5 seconds. You subscribe, then I proceed. If you have not subscribed, guys, kindly subscribe, we move. Okay, so now this is NZDHF, and this is supply and demand with top down analysis. So NZDHF, we're just going to come to the weekly time frame. What do you see on the weekly time frame? You see that price has been dropping. This is lower low, lower high, lower low, lower high, lower low, lower high, equal low. Now, instead of making another lower low, price has made an equal low, and it is also reacting in this weekly area of demand. Weekly area of demand. This is where price is or has been reacting from. It is now how many weeks? 1, 2, 3, 4 weeks, and the previous week has given us a bullish okay, necessarily not an engulfing candle, but it is a big bullish candle that is engulfing the previous 4 candles. I think the previous 5 candles the previous week, meaning that NZUSD is likely to be buying. And people that use indicators, I told you, if you get the, it is called what, the RSI, you're going to see a divergence in this area. Let me see if I can get for you an indicator here. RSI, what, let me just search it. Sorry guys. Okay, so now this is the RSI. So if I click on the RSI, you're going to see a divergence down here. What do we mean by divergence? Divergence is whereby the price is making higher highs, lower lows, and the RSI is making higher highs, indicating a change in momentum. This is what I'm looking for. So you see the RSI, it is making a clear divergence. This is a low, this is a higher low, and the what, the price is making low, equal low. So this low and this one are equal, but on the RSI, this low and this one are not equal. This one is high. This is a higher low, meaning we have high chances of buying from that area. That is a confirmation of a bullish or a reversal from that area. And this is also a double bottom on a weekly time frame. If I were you, I'll be looking to buy this NZD chef. If I were you, I'll be looking to buy the NZD chef, and I think the NZD chef is going to be moving around 200 pips to the upside. So if I were you, I'll be looking to buy NZD chef at this moment. So now the weekly is telling us that we are turning into a reversal and we are going bullish. This is a double bottom. There is no way we are heading up from, there's no way we are heading down from here unless we come up here, make a double top, fail to break this high. That is when we can get down, but we chances are high we are going to break this high and come up to this level here. This is the next supply zone. So now that is the weekly is telling us buys are better than sells. So we come to the daily. So when you come to the daily, what do you see? What do you see on the daily, guys? The daily is simple. Price price made a low, this is a low, and then came to make another lower low, but it failed. This is low, high, equal low, and the same double bottom that you're seeing on the weekly is the same double bottom that you're seeing on the daily. And I'm sure there's a divergence here. Same things. This is a low, this low is here, this low is here. Look at this low. Now look at the divergence. Is very high. The divergence is very high, very steep, showing that the bullish momentum is very high around that area. Remember, this is a weekly demand zone, and now there is that divergence on divergence on the what? On the daily time frame. This is a low, another low, but this low is higher than this one, meaning, and you said that there was a bullish engulfing candle on this low, which gave us a supply zone. When price came here, respected the engulfing candle. Guys, trading, when you see these setups for many periods of time, sometimes it becomes harder to forget or to get them out of your head. It becomes impossible to forget these setups. So the risk, the stop loss would be 23 pips. Right now you'd be in 52 pips in profits. However, that is not all on the daily time frame. So we saw a demand zone that price bought from on the daily time frame. Now we want to look for how we are going to enter for buys on the lower time frames. Now that we know that this NZD chef wants to buy, so we should look for how we are going to enter for buys on the daily time frame. So what do you see? You see that there is something like a demand zone here, which though it is not as clear as this, but it is there because we broke structure here, and this is the level that brought us to the block of structure. So we're just going to mark that level, mark it well like that. Okay, so now after marking the level, we're going to drop down to the 4 hour. Remember, this structure has been broken. There's a break of structure here. I know you guys want always put these lines here. There's a break of structure there. I think you can see this was low, high, lower low, lower high, equal low. Now this is a break of structure or a change of character. The first one is always a change of character, isn't it? Whatever it is, but it shows that we have made a higher high from this previous high. So now we're expecting to buy from down here and then proceed up. So how are we going to buy from down? Come down here. So when you look at this very well, this price action, you see that we have a demand zone in this area. The demand zone is in this area here. I think I'll mark the whole candle like that. There's a demand zone in that area. So price has gone up to break structure. So you expect there is trend line liquidity also, which makes even the setup more strong or more valid. We have trend line liquidity, we have equal lows liquidity. People who trade liquidity, there is equal lows here. So this is trend line liquidity. If you want that one, price has to come and take out this liquidity, and there is equal lows liquidity here. So price is likely to come, take out this liquidity, come down, take this out, then buy from this area and go to the upside massively. That is what I do expect. So stop loss I'll put below this high, so around, I think 25 pips should be enough. There is nothing down here, but I'll just put it there. And then the take profit, just come back to the daily and target. First, always target the previous high, which is 1:2, 50 pips, but the target is around 200 pips. 200 pips, guys, around 200 pips. 200 pips, but I know it is going to go up to there. But however, target the liquidity up here. 200 pips should be okay. There should be okay. So that is 1:8. 1:8. That is what I expect on NZD chef. So that is it. If you can pull your stop loss a little bit up to there to cover all this low, that is okay. So just make it 30 pips and then target how many? 200 pips to the upside. So that is how we are expecting USD chef to do what? USD NZD chef to play out. So this is a low, this is a low, higher high. So we can come here to make a higher low and then shoot up. However, price might decide to buy in areas nearby. Let me see if we can see a clear zone. There's a lot of liquidity down there. People who trade liquidity, there's a lot of liquidity down there. I think you can see it. I know there is this area here, but I don't trust it because there's an area below. So I think price is going to come below. Price will come below. Let me see on the 2 hour. Still it is the same zone. This one was retested. Still the same zone. 1 hour. 1 hour nothing. So I think price is going to come below. It might take long, but price definitely is coming down here. Pick the orders down here and then go to the upside. So that is how you can use demand and supply with top-down analysis together with the liquidity to get your entries. So that has been on NZD chef, and you guys should monitor or watch out for this trade. It is a trade that is likely to happen since we have seen a break of structure, or what some people say call a change of character to the upside. I don't expect price to buy here. I expect it to buy from down here. So I think that is all I wanted to show you for now. Subscribe for more videos, and if you've learned something from the video, kindly like the video. So that is all for today. Bye.